Hello and welcome to the Weekend Investing Daily Bite, 30th of April, end of the month. A good month, I would say, given where we were end of March. Also, the month marred with a lot of news flow, whether it was regarding tariffs or whether it was regarding the Indo-Pak conflict. Today's episode is going to be about defense stocks, how they're grabbing the limelight, and how one should be careful in terms of jumping on stocks that are just running away. So that is the second part of the video. Do read the disclaimer fully and do subscribe to the channel if you haven't so far. Let's see where the markets went today. So Nifty absolutely flat once again. I think Nifty is waiting with bated breath what is going to happen on the uh, Pakistan front. I think there is a lot of narrative that's going around that uh, some action this weekend is likely. There have been small skirmishes on the LOC. Some larger action is expected, but who knows whether there will be one right now or at some more opportune time. Nevertheless, the market has started to sort of discount it and yet not fallen off. So that's to the credit of the markets. So Nifty absolutely flat. Nifty Junior a bit weaker at minus 0.6%. So what is happening, at least in sessions today as and yesterday, is that FI monies continues to come in. They have pumped in like 37,000 crores, and that is causing some stability in Nifty, while the rest of the market, where FIs are not so active, are seeing some sell-off. So mid caps selling off 0.68%, but not too much, and small caps down 1.79%. Here is where the most damage in small caps and the micro caps happened in today's session. Bank Nifty also down 0.5%, mainly led by SBI. SBI results are due, and there is some caution ahead of that. Gold has been slammed down. Gold is down 2% for the day. And as I was mentioning yesterday, we look like we're coming towards the 92,000 mark soon. Market breadth was not good at, versus yesterday or versus previous day. 143 to 357 advance decline ratio. So poor advances. Heat maps largely red, but big reds in Bajaj Finance, Bajaj Finserv, and SBI. Some green in Maruti, Bharti Airtel, SBI Life, and few other counters. HDFC Bank also contributed plus 1% to the mix. Nifty Next 50 much more red. So defense stocks which were running up cooled off today. HAL down 2.6%, DMart down 2.5%, Adani Power, Bajaj Holding, PNB, REC all seems to be giving up some uh, profits from recent gains. DLF, JSW Energy, Lodha, Hyundai, uh, IOC, good results for leading the rally. Sectoral trends, we had real estate do very well, 1.9%. And you had many sectors nearly a 2% down for the day. So capital market down 2.3, defense down 1.8, media down 2.2, and PSU banks led by SBI down 2.2% as well. Rest of the sectors were largely flattish. Real estate trying to make a comeback. It is down from the top quite a bit, but macro developers, Godrej Properties, DLF, Sobha, Raymonds, all doing very well in today's session. They are off from the bottom, but there is not real big moves that are happening in real estate. It is just that comparatively to other sectors, it did reasonably well today. So the topic of discussion is defense stocks today and how the trends will, suck people in on such moves. So rising India-Pakistan tension has fired up the defense stocks. Now, can you see this very sort of obvious correlation that there's talk of war and people jump to buy defense stocks? Um, there may or may not be any direct correlation as such, because it may just be a 1 or 2 day operation. It may not result in any major change in defense orders, but somehow that feeling that we are into a war and hence defense stocks have to do well, that narrative starts going up. So the geopolitics have heated the triggers. Massive gains have happened in defense stocks recently. So since March, defense stocks have been going up, but in the last 2 or 3 sessions itself, defense stocks have gained like 10% in 2 sessions. Since April 25th, uh, you have seen a dramatic move, but since March beginning, the move has been even more spectacular, almost 40% plus gains. We've had some fantastic gainers in Paras, Data Patterns, GRSE, Kochi Ship, Masdok, and so on and so forth. But several of them had been beaten down mercilessly before this run up. So it is very difficult to switch from badly beaten stocks in this phase to suddenly to newer stocks. Current rally, of course, 42% up, is making a new high. So very promising from that point of view. But in Feb to April 25, you can see several of these stocks really doing very well. Some of them are there in some of our strategies, but most of them have been booted out, I would say. GRSE, Paras, Solar Industries, Masdok have all given more than 50% returns in the February to April 25 move. So a lot of folks thematically will rush into this. Perhaps the funds which are defense funds will be pushed for new sales. Uh, and what happened in the last rally was when defense was peaking out. That is where the new offerings came out, and people were pushed to buy them at that point of time. In December 24 to Feb 25, just in about 2 months, 2.5 months, we saw a massive loss in defense stocks previously, and this has now been fully recovered. So, very sort of difficult time because uh, after a very sharp drop, if the sector goes up very sharply, still uh, momentum strategies may take some time to pick them up, and this kind of a very high choppiness in sectors is very difficult to trade. During the correction, of course, you had stocks like Cyient, Zentech, BEML give up 30 to 40% kind of gains in just 2 3 months, and only very few stocks remained in the green or less uh, impacted. So what did I do? Sorry, one second. So in the last 5 years, if we see, defense stocks have done really well. So 5 year CAGR on some of these stocks is 4.5 years is 112% on Nasdaq, 67% BEL, 40% BEML, Astra Microwave, 67%, and this is 5 year CAGR I'm talking about. Solar, Bharat Dynamics, GRSE. So a significant gain has been made on these stocks. Whether this new leg that is starting up will result in a durable rally upwards or not is yet to be seen. My sense, of course, is that if you are making new highs, there is likelihood that these stocks will go up higher. But whenever I see that there are stocks that are running up basis very immediate hot news, that possibly can be a concern. But then you want to follow your strategy, but also have your exits in place so that in case it's a whiplash kind of a rally, you will get out soon as well. 1 year, 3 year, and 5 year look great on some of them, although on 1 year, several of them are still in the red. So, several stocks which have performed over 3 and 5 years have been taking a rest year for this one. Uh, so, as I was mentioning, it is very easy to get into the FOMO if you're not following the process. So, if you're following the process, then yes, some stocks will do right, some stocks will flip you on the wrong foot, but then you will get out of them also. But in case you are betting on these stocks basis the narrative, then you must get your house in order in terms of pre-deciding that what if they don't go the way you want them to go. At what point will you be getting out? There has to be good stops in place. So, for instance, uh, in the run of Masdok, it which has clocked 112% in last 4.5 years. There have been several big falls, 35% fall, 28% fall, 38%, 34% fall. It will not keep going up incessantly forever. There will come a point of time when some of these falls may become 50%, 60%, 70% also. And then it may be subdued for a long period of time. So knowing where to exit is very important. Uh, each time when the rally is getting hot, you will see a lot of narrative or noise starting to build up. Not at the start of the rally, like this time also. And then that's a sort of the wrong time to sort of get into the stock at that point. Paras Defense also has done similar kind of CAGR, but look at the kind of moves it makes. I mean, 170% up, then 65% fall, then 250% up, then 50% fall. And then now is the start of the next move. So I don't know whether this will go according to this or we will flop down. But if you are getting into this, must have stops in place. Bharat Electronics did almost 13 years of nothingness, and then went up 20x in 5 years. This is the kind of rally, sustained rally, that you want to let your winners keep running if you do get into such stocks. So the momentum case study here basically is how to automatically identify trends and how to exit when there's weakness without giving any attention to FOMO or hype. So if stocks were going up, you are buying. If they're coming down, you're selling. You're not really letting the narrative get into your head that why I'm buying and why I'm selling, or what the TV is telling me about the potential war or not. So without being greedy to capture the entire part of the rally, we only want to take, some parts of the rally. So for instance, in Mascot Dock, a strategy may have entered here, exited here, did 4 or 5 times, and then, maybe the momentum slowed down. In Hindustan Aeronautics, you entered here, you exited here, and maybe it has not yet entered again. In Bharat Electronics, you just got this portion, but that was also 100% type of gain. In Kochi Shipyard, you entered at around 300-400, you exited with 100% gain, perhaps even more, and that was the end of it. So, opportunistically using your capital at the right time, and also getting out and maybe losing some ground from the top for sure, is very very ideal for playing sharp moving stocks. So timely entry when momentum starts to build. So momentum strategies are designed to detect when a sector or stock will outperform. Instead of entering based on news or hype or delay, entry happens when price strength is confirmed, and it reduces the risk of entering very, very late. Of course, as long as stock continues to show relative strength, you will hold the position without emotion, and you will ride the bulk of the trend without second guessing or having any fear. Momentum investing will use clear cut rules like ranking drops or moving average breaches to exit weakening positions. So you are sort of assured that a major hit to your position will not happen. And of course, because you are diversified across 10, 20, 30, 40 stocks, any mishap, if it happens in any of the stock, also is saved by the diversification. So this usually helps avoid the common trap of holding through deep corrections, because once a sector goes into a deep correction, who knows when that sector will come back up. I mean, if the kind of CAGRs we have seen in 3 to 5 years, in the last 3 to 5 years, I'm not sure how long they can sustain going forward, given that these stocks are running much farther ahead of their potential valuations as per the value experts. Um, Also, it eliminates emotional decision making. So, no need to guess if a stock is peaked or worry if you missed the rally. Just follow the strategy, and the strategy logic handles will both exit, entry and exit systematically, and it will protect you from fear based exit or greed driven uh, entries. So, what has been your journey with defense stocks? I know a lot of folks got stuck last year when a lot of these new fund offerings came in defense sector, and unknowing, uh, I would say, not so familiar with the market people were pushed defense funds down their throats by their distributors, and without any plans of exit. They have now got an golden opportunity in case you did not want to be in this sector. I mean, these sectors have run up, so you can take a more measured approach. Maybe you can diversify in case you got concentrated. So all those things can happen now in this space. And who knows, defense sector may become a rally of gigantic proportions. I'm not ruling that out. I'm just saying, have your plan in place, and do write in the comments what is your plan in the place. And thank you so much for watching these videos. Do like and share these videos and subscribe to the channel. Thank you. Bye.